This is going to be the public quarterly theory model that I've decided to give you guys. And the first thing I'd like to mention is it will be a pretty simple model, easy for you to follow, and feel free to use it as a foundation and expand on it yourself. First, I'd like to cover some basic concepts that are going to be used in this model to make sure that you understand how to apply the model. So the first will be sequential SMT. Hopefully that you already know what that is, but if not, I'll have a video, or there's an older video on the channel that will explain it properly. But simply put, it's an indication or signal that price is preparing to reverse. So on the left we have a stop hunt, and on the right a failure swing, and this is our SMT. You will then see that I have 2 consecutive quarters drawn out, and we have this SMT between these 2 quarters. And remember, sequential SMT can occur between any 2 consecutive quarters in the cycle. So this is going to be the first main concept that we'll be using for this model. Next will be a precision swing point. And what this is, it's a confirmation of our reversal. It does not need sequential SMT to work, but it will be a much higher probability. You can see here I have 2 swing highs drawn, and you'll notice that the middle candle of the swing point is closing a different color in each asset. And this is a precision swing point, okay, and a cracking correlation. I'd like to quickly recap what a swing point is. A lot of people seem to be confused on what the actual definition of a swing point is. So you'll see that we have a 3 candle formation. For a swing high, the middle candle of the 3 candle formation must be higher than the candle to the left and to the right. And vice versa for a swing low, the middle candle of the swing point must be lower than the candle to the left and to the right. So now you should understand what a sequential SMT is and what a precision swing point is, and we can begin to apply it and blend it into a model. One quick side note is you're going to fail if you're unable to determine the narrative of price. In order to truly trade it in line with price, you must know where price is gravitating towards. A lot of people are trying to skip into quarterly theory before they have a solid foundation in basic ICT, and without that, you'll fail to apply quarterly theory. It's simply a magnifying lens built on top of ICT. So you must first be able to determine the draw liquidity, and then only trade in line with that narrative. So, this is the model. There will be 3 steps that you'll be looking for, and you must follow these rigidly. The first step will be a higher time frame gap, so your basic fair value gap, on the daily, 4-hour or 1-hour time frames. So you must first identify the gap that you'll be using. The second step will be a lower time frame sequential SMT. This is going to be on the daily or 90-minute cycle. So you'll be looking for a sequential SMT between the quarters of the day or the quarters of an individual session. And you'll see we'll only be trading the 9 to 10:30 a.m. Eastern Standard Time window. That is all you need. It's the highest probability time of the day, which would be Q3 of Q3. So we'll only be trading within this time window. The final step will be a lower time frame precision swing point. So that will be on the 15-minute or 5-minute time frame. So your entry may be on the precision swing point itself, or if you wish to have additional confirmation, feel free to go on to an even lower time frame, or stay on the time frame of the PSP and look for a simple entry model, such as your inversion fair value gaps or a breaker setup. So here I have an example of what the model will look like. You can see on the left I have drawn a higher time frame fair value gap, and price is returned into this gap. Okay. If we choose to zoom in on this reversal, we would be looking for a sequential SMT, and a precision swing point to confirm that reversal. It's quite a simple model to follow, so if you wish to refine it and expand on it yourself, feel free to. So here is a chart example of what we'll be looking for. Here I've drawn out a 4-hour fair value gap, and we see that price has returned into it. We would then be looking for our lower time frame sequential SMT. So in this example, we had a daily cycle sequential SMT on the highs within this 4-hour fair value gap. For the daily cycle, we'll be using the 15-minute time frame, and this was an SMT between the highs of London and the highs of New York AM. Following this, if we moved on to the 5-minute time frame, you would have found that we had a 5-minute precision swing point, and you could have chosen to enter immediately after this is formed, or you will see that on the left there was a 5-minute fair value gap forming after the sequential SMT and precision swing point, which may have been your entry. The final message I want to end off with is how to frame a trade. There are 3 key steps when you're looking to frame a trade idea, and the first will begin with the narrative. You must first determine the narrative and where price is gravitating towards before you move on to the next stages. If you are unable to determine the narrative, it would be a good idea for you to not trade and just to watch. But if you successfully determine the narrative, you will then be looking for specific key levels. These will be key levels in line with your narrative, which will allow you to take a trade. So in this example, your key levels would be a higher time frame gap, highs or lows that will have sequential SMT on, and you'll be patient for these key levels to be hit. Only when these key levels are hit can you move on to your entry model, where you'll look for your precision swing point or a lower time frame gap after the precision swing point. And you must be disciplined enough to stick to that entry model. These are the 3 key steps that you must follow when framing a trade idea, and if you fail in at least one of these stages, then you'll fail. The last thing I want to say before I end the video is that the reason that you are not where you want to be is because you are not the type of person that deserves to be where you want, or you are not the type of person that is where you want to be. You get there mentally before you do physically, so first you must become the person before you become the person.